Dig deeper into China's economy now with Thomas Hayes. He is the chairman and managing member of Great Hill Capital. Welcome back to the show. Thanks very much.
Thanks for having me, Sean.
The big takeaway is that this new survey indicates that China's economy is outperforming the United States. Let's hear your take on that. What is driving it? And from China's perspective, is this sustainable?
Yeah, well, China has been a leading indicator. If you recall, the peak cases in China's epicenter of Wuhan took place in February of 2020, whereas our epicenter in New York City, our peak cases initially were 2 months later in April. So pretty much all the economic data has been about 2 months ahead of the curve from China than the US. And as we move here in recovery and we look at recent output, GDP for Q3, for instance, in China was 4.9%. In the United States, it was 33.1% annualized. If you look at Q4 estimates, China is going to grow at 5.8%. However, recently, just this week, the Atlanta Fed put our estimates for Q4 at 11.1%. If that's the case, we will only be 1% lower than pre-pandemic levels of output by the end of the fourth quarter, which is very promising considering some of the negative news that you're seeing lately. The underlying economy is very, very strong. Now, leaving that aside, Sean, if you look at 2021, China is expected to grow at 7 to 8%. The United States could grow as fast as 5 to 6%. And this year in 2020, China will be the only developed economy to grow positive GDP between 2.1 to 2.3%.
Now for the very sobering part of all this, there is a measure that sits on President Trump's desk that could become law that would delist Chinese companies from U.S. exchanges. Let's talk about what that would mean for the short and long term for Chinese companies.
Yeah, this is actually the concept behind this is reciprocity, meaning that this administration wants Chinese companies to abide by the same auditing standards as U.S. companies do in order to access the U.S. capital markets. Now, of the 190 or so Chinese companies listed in the U.S., 30 of them already have dual listings in Hong Kong. So many managers have just moved the capital from the U.S. exchange to the Hong Kong exchange. Probably more Chinese U.S. listed companies will get that secondary listing in Hong Kong. They have a 3-year runway to do that. This doesn't take effect for 3 years. And furthermore, it's not that stringent in that the exchanges are going to be responsible for the audit inspection, which kind of makes it a bit easier standard to comply with. And furthermore, with the new administration in 3 years to iron it out, it'll probably prove to be less dramatic than it appears at present.
Let's talk about the new administration coming in. Could China retaliate with the measure on Trump's desk, firstly? And secondly, President-elect Biden has made it clear that he plans to keep any kind of deals, tariffs in place, at least for the first 100 days. Is that to be expected?
Yeah, I think for the first 100 days, you won't see any dramatic changes. I do think that this administration wants to align with other allies in order to deal with these trade issues and trade agreements moving forward. So you're going to see a completely different tone a few months out, and the market expects things to go a bit more smoothly than the negotiations did in the past year and a half. So that should be generally positive for global trade.
And China's manufacturing expanded in November, and the country seems much further along in combating COVID than many other nations. Is that behind this growth, and will this economic expansion continue?
Yeah, so it was the highest read in 3 years, the largest orders in over 10 years. So the expansion number, 52.1 versus 51.5 expectations, was very promising. And we're seeing the consumer pick up in China, which has been a big deal. That's been a lagging indicator. Now that domestic demand is coming back strongly, the international demand is still there, huge demand for PPE, huge demand for work from home and study from home equipment, electronics, computers, etc. So that should continue moving forward. We also saw it in raw materials prices. Both the prices and the output went up in the most recent print, and that factory activity has just been phenomenally strong due to the domestic demand finally coming back in China.
Thomas, we only have about 30 seconds. How is China's economy going to finish the year, and how critical will this first quarter be for Beijing?
Yeah, I think the key thing that Beijing needs to focus on, they're removing some of the ultra accommodative policy And you don't want to do that too quickly because the U.S. has continued to keep its foot on the gas. We're going to have probably another $500 billion stimulus, maybe as high as $900 billion or something in between. We also have $120 billion a month in quantitative easing, still bond purchasing. So I think in order to keep the global synchronized recovery in place, Beijing should keep that policy easy and loose, and then we'll get global momentum, and then you can rein it in a bit, maybe 6 to 12 months down the road as more and more people get vaccinated.